Good afternoon, everyone. This is Manoj Kumar Mishra from Department of Accountancy. I'm heading Department of BCom Honors. Today, I'm going to take you to a new journey where I'm going to explain you about reconciliation of cost and financial accounts. In my previous videos or in my previous chapter, I've explained you about what is cost accounting, what is cost sheet, what is use of cost sheet. So I'm going to give you some brief of that, and then I'm going to come on this chapter. Cost accounting is basically a branch of accounting where we deals with cost of a product, profit of a product, and to find out the selling price of a product. Suppose I want to give a quotation for a product in market. A consumer or one of my customer is asking me a quotation for a bike, or he is asking for a quotation of a truck. So first I supposed to find out the cost of that truck. Then I'm going to add up my profit and I'm going to give the selling price to him, that at which price I'm going to sell it to him. So for that I'm going to use cost sheet that we have discussed in our previous videos. So today our topic is reconciliation of cost and financial account. Now the question comes here, what is reconciliation statement and why we require it? In any business organizations, there are two sets of book. The first set of book is known as cost book or financial book. Profit shown by them has to be same. But unfortunately, at the end of a specific period, when I'm going to compare cost account profit and financial accounting profit, they are not same. Suppose if cost accounting means cost sheet is showing me a profit of 40,000, at the same time, financial accounting may show a profit of 60,000. So why there is a deviation? Cost accounting showing a profit of 40,000, financial accounting showing a profit of 60,000. So why there is a deviation of 20,000? So for that we supposed to prepare a statement which is known as reconciliation statement. So reconciliation statement is prepared to find out the reason for deviations in profit figures. So now we are having some idea about what is reconciliation statement. So again, I'm going to brief you that reconciliation statement is a statement which is prepared to find out the reason for deviation. Reason for deviation means why cost book is showing a profit of 50,000, at the same time why financial accounting is showing a profit of 80,000. Why these two books are showing two different figures? Why not same figure? If organization is one, there has to be only one profit. There cannot be two profit at all. But when I'm going to compare at a specific time, when I'm going to compare the profit of cost book with the profit of financial book, they both are not same. And that is the reason I supposed to prepare a reconciliation statement to find out the reason for deviation. So now here I'm going to discuss about the deviations. Now the question comes here, why there is a deviation in profit? Why my cost book is showing a profit of 40,000, at the same time my finance book is showing a profit of 80,000? Why there is a gap? Why there's a deviation? Why these two books are not showing same profit? Now we are going to come down on reason for the same. Reason is very simple, because of the methods of writing these books. Finance book, we record all the expenses, whether expenses are regular or non-regular. In short, in financial accounting, we record regular as well as irregular expenses. But at the same time, in cost accounting, we record only regular expenses. The second reason, in cost accounting, we don't record any income. But in financial accounting, we record income. This is the reason why my cost accounting and financial accounting, these books are showing two different figures. For example, in cost accounting, we don't record any losses like loss by fire, loss by theft, loss on sale of assets, loss on sale of investments. These all are the losses which we record in financial accounting, but we don't record in cost accounting. In cost accounting, we don't record any incomes like salary received, rent received, dividend received. These all are the income. We record these incomes in financial accounting, but we don't record these incomes in cost accounting. Now, whenever I'm saying you cost accounting, you supposed to think about cost sheet. You must be remembering that in cost accounting, we don't record these items. While preparing cost sheet, if you remember, we used to exclude the items like loss by fire, loss by theft, loss on sale of assets, loss on sale of investments. But when we were preparing financial accounting, means profit and loss, we were writing these losses on the debit side of profit and loss account. So in profit and loss account, we record these losses, but in cost sheet, we don't record these losses. And this is the reason there is a deviation in profit. Definitely, when I'm recording one expense or loss in finance book, at the same time, I don't record that expense or loss in cost sheet, means there is a difference in profit. At the same time, we know that in cost accounting, we record either notional incomes or notional expenses. But we don't record these items in financial accounting. Means we record notional incomes or notional expenses in cost sheet, but we don't record notional incomes or notional expenses in finance book, because finance book is based on historical cost. Expenses which are actually incurred are supposed to be recorded in financial book. Financial book means profit and loss account. At the same time, in cost accounting, we don't record any historical expenses. In financial accounting, we record historical expenses. Notional incomes and notional expenses are there in cost sheet, but these notional items are not there in profit and loss account. Means these items are not there in financial account. And this is the reason these two books are going to give me two different figures. The another reason for deviation is methods of valuation of inventories, or you can say that methods of valuation of stock, closing stock. We know that in cost accounting, we value the closing stock as per FIFO method, that is first in, first out, and WAC method, that is weighted average cost method. They both are going to follow two different methods. For example, our financial accountant who sits in office premises is going to follow FIFO method, first in, first out, for valuation of inventory. At the same time, my cost accountant who sits in factory premises is going to follow WAC method, weighted average cost method. They both are not in touch, so they have decided to follow their own method. Now we know the difference. These two methods are going to give me two different figures. Closing stock or inventory as per FIFO method is having some different value, and as per WAC method is going to give me some different value. So what is the difference? For example, factory accountant valued the closing stock as per FIFO method, and cost accountant valued the closing stock as per WAC method. Now, we know that the basic, there's these two methods, FIFO, first in, first out, and WAC, weighted average cost. These two methods are going to give me two different figures of closing stock. And because of that, the impact will be on profit. So again, because of these two methods, FIFO method and WAC method, my closing stock will be different, and ultimately that impact is going to be shown on the profit. So this is the another reason why my cost book is showing a different profit and why my finance book is showing a different profit. Apart from that, we know that there are many methods to charge depreciation. If you are aware, there are many methods to charge depreciation. But two famous method, if we discuss, that must have done in your 11th standard, that reducing balance method and fixed installment method. We mainly use these two methods of charging depreciation. So under reducing balance method, the amount of depreciation is going to be changed every year, but in fixed installment method, amount of depreciation is going to be remain same every year. Now, again, there may be possibility that my cost accountant who sits in factory premises, he follows the FIM method, that is fixed installment method, to charge depreciation. At the same time, my financial accountant who sits in office premises is going to charge reducing balance method. Now, we know that these two methods are going to give me two different amount of depreciation, and ultimately effect has to be on profit. I hope now things are very much clear to you all, that why cost accounting and why financial accounting, these books are going to show me two different profits. Apart from that, uh, there is one item, for example, you can say finance expenses. We know that bank charges, interest paid, these all are known as finance expenses, and these finance expenses, they appears only in finance book, means they appears only in profit and loss account, but they are not going to appear in cost sheet. We used to ignore these items while preparing cost sheet. Why? Because these items, means finance expenses, are not the part of cost sheet. Another reason we got for the deviation or for the difference, that finance account records finance expenses, but cost account doesn't record any finance expenses, and this, because of these two, profit shown by them has to be different. Apart from that, you must be aware about that in financial accounting we record donations, we record income tax, we record transfer to reserve, but in cost accounting we don't record such entries, and because of that this could be the another reason for the deviation. So here we have discussed few points about why my cost book is showing a different figure of profit, and why my another book, that is finance book, is showing different amount of figure. And few of the reasons which we have noted down, the first one was, if you are aware, that we don't record any irregular expenses in cost sheet, but at the same time we record regular and irregular both the expenses in profit and loss account. Whenever I'm using word profit and loss account, it means I'm talking about finance book, and whenever I'm using a word cost sheet, it means I'm talking about cost accounting. The next reason was, we don't record income in finance book, but at the same time we record income in cost book. The third reason, notional income and notional expenses. Notional income and expenses we record in cost book, but these items we don't record in finance book. And this is the reason that these two books are showing two different profits. Apart from that, we have noted out few things like methods of valuation of closing stock, means methods of valuation of inventories. One accountant, that is cost accountant, he follows RBM method. At the same time, my financial accounting, he follows fixed installment method. Two different method, two different amount of depreciation, and because of two different amount of depreciation, profit shown by these books are different. And apart from that, if you are aware about because of the reasons like depreciation and closing stock valuation, we are going to get to different amount of closing stock or depreciation, and because of that our profits are different. Apart from that, we don't record donations or income tax or transfer to reserve or distribution of dividend, such entries in cost accounting, but we record these entries in financial accounting. Think about profit and loss account. We record their items like to income tax, to donation, to transfer to reserve, to dividend paid. But these items which I have discussed now, we don't record in cost sheet. Why? Because these items are not the part of cost sheet. Now please come down to the next topic, that is procedure of reconciliation or procedure for reconciliation. Till now we have covered two things, that what is reconciliation, and the second we have done what is the reason for reconciliation. Now I'm going to come down to third part, that is procedure of doing reconciliation. Now a very famous saying is there, that when you are going to solve any question of reconciliation is to be based on the concept of what other has done. Means if cost accountant is writing cost book, he's supposed to follow what financial accounting has done in finance book. At the same time, when financial accountant is writing something, he's supposed to follow what cost accounting has done in cost book. And on the basis of that, we got a rule that what other has done. So what other has done is basically the theme of this chapter. What will happen here? You will be given one book's balance and you're supposed to find out the balance of another book. For example, in question they are going to give you cost accounting balance and you're supposed to find out financial accounting balance, or possibility that they are going to give you balance of financial accounting and you're supposed to find out balance of cost accounting. So one book profit will be given, you're supposed to find out the profit or loss of another book. Or you can say that profit or loss of one book is given and you're supposed to find out profit and loss of another book. So one book profit and loss will be given and you're supposed to find out another book of profit or losses. I hope things are very much clear to you all. And the basic rule which we are going to follow is what other has done. So this whole chapter is based on the concept of what other has done. If financial accountant has followed that method, cost accountant will follow the same method to find out the reason for the deviation. And once reason for deviation is cleared, then I can list down that item into my reconciliation statement. So first I supposed to find out the item, then I supposed to find out the amount of deviation, and then I supposed to find out the reason for the deviation. Now cost accounting is showing salary expenses 5,000 and financial accounting showing salary expenses 6,000. So there is a gap of 1,000. Now suppose if my cost accounting is showing a salary of 5,000, at the same time my financial accounting is also showing a profit of same amount. It means there is no deviation. And when there is no deviation, that item will not appear in reconciliation statement, because we are preparing reconciliation statement only with the expense, which is not common, or only with the income, which is not common. If one item appears in both the books with same amount, for example rent, in financial accounting 5,000, in cost accounting also 5,000, same figure, no deviation. No deviation means that entry is not going to appear in reconciliation statement. Second example we can take, suppose rent is written in financial accounting 8,000 and in cost accounting 4,000. Now there's a difference of 4,000. One book 8,000, one book 4,000, so the difference is 4,000. Now in reconciliation statement I am going to make the entry of 4,000 and I am going to follow the basic principle of what other has done. I hope my things are very much clear with you all. Now you must be aware about opening stock and closing stock. Opening stock is basically the stock at the beginning of the year and closing stock means stock at the end of the year. We record opening stock and closing stock in both the books. We record in finance book also, we record in cost book also. Possibility, when my accountant is valuing the closing stock, he follows the FIFO method. At the same time, the another accountant, he follows the WAC method. Now these two methods are going to give me two different figures, and because of these two different figures, profit will not be the same. For example, you are going to start with costing profit and at the end of the problem, you'll get the profit of finance book. And suppose if in the question finance book is given, then you can find out the profit of cost book. So rule is very simple. One book profit will be given, another book profit is supposed to find out. If in question cost book profit is given, then in answer we supposed to find out finance book profit. Or if in question finance book profit is given, so we supposed to find out cost book profit. I hope things are very much clear with you all. So I'm going to cover till here only, and probably in next lecture I'm going to cover the basic steps to solve this problem. So today we have covered, I'm going to recap that. So today we have covered about, so reconciliation statement means a statement which is going to show me the reason for the deviation. And we have discussed about the deviation, reason, and after reason we have done with how we are going to treat them. The concept is very clear, what other has done. So the what other has done, that only I supposed to follow. If cost accountant follows something, the financial accountant has to be followed the same thing for reconciliation. So reconciliation statement is a statement which is prepared to find out the reason for the deviation. And there are many reasons, like regular expenses appears in cost and finance both the books, but irregular expenses appears only the finance book, they don't appear in cost book. Incomes are not part of the cost book, but incomes appears in finance book. Notional income and notional expenses are the part of cost sheet or cost book, but these items are not the part of finance book. Apart from that, there may be possibility of over absorption and under absorption of overheads. Over absorption means and under absorptions means the two books are going to give me two different figures of overheads. Overheads means indirect expenses. Apart from that, loan paid, uh, apart from that, you can say interest paid, it's a finance expenses, it appears in finance book but not appears in cost book. Loss by fire, loss by theft, loss on sale of assets, loss on sale of investments, all these items, they appears in finance book but they don't appear in cost book. In cost book we record notional expenses, but in finance book we don't record such notional expenses or any notional income. But in finance book we record historical expenses. So I hope with this we are very much clear about the idea of reconciliation statement. So what will happen in question, they are going to give you one book of profit, they are going to give you the profit of cost book. So in answer you're supposed to find out profit of finance book. If in question profit as per finance book or loss as per finance book is given, so you supposed to find out profit or loss as per cost book. So thumb rule, cost book profit and loss is given, find out finance book profit or loss. If finance book profit and loss are given, you're supposed to find out what cost book profit or loss. And at the end, I just would like to tell you that there are many methods to solve the problem in reconciliation statement. You can follow any method which is suitable with you, and you can the answer will be the same and the marks treatment would be the same. It is not like that you're supposed to follow a specific method. No, you can follow any method, but answer has to be remain same. And with this, I'm going to wind up here. Thank you so much, everyone, and hope you to see in my next video. Thank you so much again. Bye. Take care.